Hi there. William Howard Taft, that's President William Howard Taft to you. I was the 27th President of the United States, Supreme Court Justice, Chief Supreme Court Justice. I was also the only person to ever hold both of those titles. And I was a pretty great president. And, history has said some pretty awful things about me, like getting stuck in a bathtub that was spread by Teddy Roosevelt. I've written his name. I refuse to say it, but that's what I used to call him. He didn't like me. But you know who does? Mark. Mark does. Professor Mark at stockmarkerjobber.com, and this is his weekly newsletter, and it's my honor to present it to you.
All right, thank you, Mr. Taft. You're one of those presidents who actually did a really good job, but no one actually remembers. Um, but hopefully, after this, people will. I know you were a golfer. We'll talk a little bit about this more. Yeah, I know you're a Yale man. I think that you're at the fourth hole here. Of course, I was not a Yale man. I mean, I remember driving by Yale on my way to UConn. But regardless, whatever. You're a good part of history, and I'm glad that we can bring you back to light. So let's talk about the market, all right? So we want to talk about what's going on with, say, the S&P 500, just the broader markets. And it's important to remember that different sectors drive the different market at different times. Sometimes different sectors are in, I don't know, the driver's seat, I guess you would call it. Sometimes it's technology that influences the market. Sometimes it's the financial sector. It's always different. It changes. It's never the exact same. So one of the things we want to do, and one of the things we do here at stockmarkerjobber.com, is to look at these different sectors because the S&P is the sum of its parts. And if we analyze the parts, we can get an idea as to what's going on in the sectors. I mean, sorry, let me say that again. If we analyze the parts or the sectors, we can get an idea of what's going on in the broader market. So we got to understand that certain price levels are more important than others. These are called support and resistance levels. If a market is trending lower, it's because there's more supply, and I use these terms interchangeably. There's more supply or sell orders than there is demand or buy orders. So the sellers need to offer their shares at a discount. This forces a downtrend. When we get to a support level, well, there's enough demand that it can absorb all of the supply or sell orders, and the downtrend stops. And downtrends that stop at support, they tend to either consolidate, but a lot of times they can rebound, and we can get a tradable move out of it. I don't know if you guys can hear, but that's my dog Clifford in the background there. Um, Resistance is the opposite. When a market is going higher, it's because investors who want to buy can't find enough sell orders or supply to satiate their demand, and they have to be willing to pay a premium. But when we get to resistance, there's enough supply that they can buy all they want. So support and resistance levels are important. The market talks to us, and the way it talks to us is how it acts when it gets to these levels. All right. You can look at it like this: support and resistance levels are like you're hiking in the woods and you come to a fork. It's pretty rare that something gets to an important support level or an important resistance level and just hangs out there. They tend to make moves one way or the other, but regardless, they can be tradable. So sometimes these support and resistance levels can remain intact for months, even years, and we call this market memory. Levels that were resistance can become support, and levels where support can become resistance. And believe it or not, well, you should believe it because it's true. This is because of market psychology. A level that was support can become resistance because at a support level, there's a lot of buyers. If the price ends up falling below that, a lot of these buyers decide they made a mistake and they want to get out. They want to exit their position, but they don't want to lose any money. So they tell themselves, gee, if I can get out at the same price I bought it at, I'm going to. I can exit for break even. So they place their sell orders at the level that was support. Resistance can become support for the opposite reason. Okay, it's seller's remorse. People sell, the price goes higher, they say I shouldn't have sold, I'm an idiot, I need to buy my shares back, but I'm only going to do it if I can get it at the same price. Only if I can get them at the same price I sold them for. So resistance can become support. So let's look at what is going on in the market. And let's see what we need to look at this week here. Remember, we got a big week coming up here. We got the Fed, we got a bunch of earnings, but we could shut the news off and just let the levels in the market tell us what to do. Here's a really good example. Here's the S&P 500 ETF, the SPY we call it. It's the ETF that tracks the S&P 500. A lot of people trade this. You can't really trade the S&P 500 index itself unless you trade futures or whatever. But for retail investors, this is a really good thing, and institutional traders trade it too. Notice this importance of this 390 level. Okay, support became resistance. Buyer's remorse. People bought, the price goes lower. A lot of these buyers think like, oh, I'm an idiot. I want to get out. I made a mistake. I'm going to place my sell order at the same level I had my buy order at. If there's enough of these sell orders being placed by remorseful buyers, the level that was support becomes resistance. Now let's look at the opposite here. Resistance becomes support. This is the opposite. The level that was resistance can turn into support because we have remorseful sellers who regret selling once the price goes higher. So they tell themselves, gee, I'm going to buy my shares back, but I'm only going to do so if I get it for the same price I sold them at. If there's enough of these buy orders being placed by remorseful sellers, the level that was support can become, the level that was resistance can become support. So it's so critical if you want to be a successful trader to understand the importance of this whole concept of how some price levels are more important than others. We could see this 390 level with support, resistance, support, resistance, support, resistance, support. If we keep going lower, or if we make a reversal and we go lower, there's a good chance there's going to be support again around 390. We've reached resistance around 411. I think we're within a few points of it, and we're talking about a $400 security. So a few points is pretty much right there. All right, so let me just move ahead a little bit here. Let's see what else. Now, this is the technology sector. This is the biggest sector in the market. So a lot of times it's the most important to watch. And as we can see, I don't have it written on the chart here, but this is about 137. Okay. There's a good chance we get up to around here and we reverse. It was resistance there. It was resistance there. Once again, resistance becomes support. So this is because of seller's remorse. Oh, hey, Clifford. Oh, my dog is here. What's going on, big fella? Come on over here. What are you doing? You looking for something to eat? Yeah, that's my dog. You can check out pictures of Clifford. He's our chief canine officer. Eventually on our website, he's looking in the backyard. What's going on out there, fella? Is there a deer or something? Now he just took something off the ground and he went back upstairs. He's mad that I'm ignoring him. All right, I'll pay attention to him in a few minutes. But anyway, resistance levels can stay intact. Resistance can become support. The point is some levels are more important than others, and if you know where they are, that's kind of your roadmap to making money. All right, so I'm going to bring out President Taft again. You can give us a little more insight. Mr. Taft, the stage is yours.
I created a policy of harmony with Congress, which helped me move a lot of my legislative agenda through. Misunderstandings about my stance on big business and a murky approach to tariff proposals on goods entering the United States resulted in the Payne-Aldrich Act. That's frustrated both supporters and opponents of the policy. It further fractured the rift within the Republican Party between conservatives and progressives. In the midterm elections, I lost the Republican majority in Congress. Now, I did impose a corporate income tax, however, which raised the national revenue more than $13 million. And under my administration, the terms shirt sleeve diplomacy, open door policy, and dollar diplomacy were created to regard in negotiations with China and Latin America. The latter involved guaranteed loans to stimulate growth, trade, and stability. Now, my wife Nellie, she did her part on foreign relations as well. She initiated the planting of Japan's gift of 1,000 cherry trees, which grace the avenues and the banks of the tidal basin, changing the face of Washington, D.C. each spring. It's quite lovely, actually.
All right, so that's pretty interesting. Um, Now let's look at the healthcare sector. This is the second biggest sector in the market. And here we can see resistance becomes support, support remains support. It's all about the levels, everyone. I'm telling you. Was an institutional trader for 25 years. Well, I don't want to age myself, maybe only 20 years, but it's knowing where these important levels are. You're 90% of the way there to being successful. So this support could be breaking. People who sold regret doing so. They place their buy orders at the same level they sold at. If there's enough, it becomes support. But it looks like we could be breaking down here. This is a little kind of what we call a descending triangle pattern. And on Stock Market Jobber, we talk about patterns, technical analysis. But what this shows us is that the buyers are kind of hanging tight and the sellers are getting more aggressive. Regardless of the market you're in, if you have complacent buyers and aggressive sellers, there's a good chance things can be forced lower. And there's a good chance we could see it here. Our financial sector is bumping up against resistance, okay, around this 35.50 level. So what have we seen so far? Okay, we've seen the tech sector is probably failing at resistance. We see the the healthcare sector looks like it may be taking out support, meaning it's going to go lower. Here we have the financial sector. This is at resistance too. All right, Mr. Taft wants to come on and talk a little bit more. Thank you, sir. Please come on. The floor is yours.
My presidency is often thought of lackluster, but as following a flashy personality like Teddy Roosevelt, it is no easy feat. Few are aware that me, the 27th president, actually busted more trust over the 4 years in office than that Teddy Roosevelt did during his 8 year administration. Of my presidency, I once wrote that I don't remember that I ever was the president.
Okay, and now we see we have the same thing going on here. A level that was resistance has become resistance again. We're also overbought. This means that things have become extreme to the upside, and that could draw traders into the market expecting a reversion, which means they're going to sell, and their actions could force the price down. So what have we seen so far? We've seen technology, financials, consumer discretionary at resistance, healthcare starting to break support. That's about 60% of the market, those four sectors. So, that's why I put a question mark there for breakout. I'm not so sure. Here's our industrial sector. We can see important levels. Notice how 102.50 has been a good resistance level. 97 has been support. Academics can't explain this. Fundamental managers can't explain this, but as you can see with your naked eye, you don't need to be a market guru to see that some levels are important. All right, come on back here, Mr. Taft. Thank you for being with us. I know you've come a long way considering you've been dead for 100 years, but hey, man, we believe in ghosts over here at stockmarketjobber.com. That's another story, but let's see.
So just to recap, I was the 27th President of the United States, 1909 to 1913, and the 10th Justice to the Supreme Court of the United States. I am the only person to have held both offices. I was elected president in 1908, the chosen successor of President Theodore Roosevelt. We already know what he was. But I was defeated for re-election in 12 by Woodrow Wilson after Roosevelt split the Republican vote by running as a third-party candidate. In 1921, President Warren G. Harding appointed me to be Chief Justice. I was born in Cincinnati in 1857, and after becoming a lawyer, I was appointed a judge while still in my 20s. I continued my rapid rise, being named Solicitor General and Judge of the Sixth Circuit Court of Appeals. In 1901, President William McKinley appointed me as a civilian governor of the Philippines. In 1904, President Roosevelt made me Secretary of War, and I became Roosevelt's handpicked successor. Despite my personal ambition to become Chief Justice, I declined the repeated offers of appointment to the Supreme Court of the United States because I thought my political career was more important.
This is our communication services sector. Notice resistance, support. This is like the home of Google and Facebook. We're overbought, a little bit ahead of ourselves. I think there's a good chance that we see some profit taking. Consumer staples is another good lesson. Resistance around 77, resistance around 77, resistance around 74 becomes support. Support around 75, I don't know, 80 becomes resistance. There's no, you shouldn't take this for granted because there's no way that an academic or a fundamental manager or an investment banker or anyone else in finance could understand why these levels are important. When I was in business school, all we heard about was random walk, right? You can't time the market. And clearly, there's no random walk because if there was random walk and the market just followed a random course, well, every level would have the exact same importance. You wouldn't see this support and resistance. But as traders, we get it. All right, all right. All right, Mr. Taft wants to come on again. He's getting a little anxious. All right, come on. Come on, Mr. Taft.
I like playing golf, and Professor Mark thinks that this is me teeing off at the fourth hole at Yale. Now, see, he doesn't have the Yaley standards. He wasn't a good enough student to make it to Yale, and luckily his brother was. So, Professor Mark, you'll be lucky enough to play this same course in 100 years from now.
All right, that's cool. But clearly, here in the energy sector, this is a perfect example. Resistance becomes support. Support becomes resistance. Resistance becomes resistance. This has nothing to do with the value of the sector. Well, actually, it does because it does value the sector. But what I meant to say is this has nothing to do with the fundamentals of the energy sector. If you put on, Fox Business News or CNBC, they try to attribute every little move in a market to some type of extraneous fundamental reason. Markets up because of COVID, markets down because of COVID, markets up because of Ukraine, markets down because of Ukraine. That's not how it works in the institutional world. No one is watching CNBC trading off it. The vast majority of these moves are just trading, investor perception. If you try to figure this out with fundamental analysis or reasoning, you're not going to be successful. That's why you need to sign up here for our webpage and join our site so you can learn how the market really works. And I speak with a position of authority. I mean, I hate to promote myself, but I'm 50 years old, and for more than half my life, I've been a trader on Wall Street. I mean, now I'm kind of semi-retired and I'm just teaching. But I was there every day. I know how it works. I know how hedge funds work. I know what dark pools are. I know what algorithms are. I mean, I don't want to bore you with that now, but it would be a good place for you to check out if you really want to learn. If you just want a tip of the day or here's a trading idea well, we're not the place for you. Move on to somewhere else. Um, the idea here of stock market jobber is to teach you And check out some of these other places. What was it? Raging Bull, Warrior Trading. These guys are crooks. They've all played big fines. They promise more than they can deliver. The idea here is if you're intelligent and you're interested, and you probably are if you're listening to me, you can teach yourself. It's the idea is we want to teach people how to teach themselves because everybody is different. Everybody has a different personality. What works for one person might not work for another person. Think about if you're a guitar player, right? I mean, are you a blues guitar player or are you a classical guitar player? Well, someone could be a phenomenal classical guitar player like Andre Segovia, but maybe if they picked up a blues guitar, they wouldn't sound that good. Someone could be a phenomenal blues guitarist like, say, B.B. King, and if they picked up a classical guitar, maybe they wouldn't be great. You have to, I'm going to bang my table, have to do what fits your personality. So we want to teach people how to teach themselves. Here we have our utility sector once again. Support, resistance, support. All right, Mr. Taft is getting a little anxious here, so I'm going to bring him back on.
I was Teddy's vice president, but for some reason during the 1910 midterm election campaign, Roosevelt involved himself in New York politics. He promised me he wasn't going to do it, but he did. He turned on me. So because of this, the Republicans, they suffered losses in the 1910 elections as the Democrats took control of the House and then slashed the Republican majority in the Senate. Allegedly, I had stolen the nomination. Roosevelt and his former Republicans formed the Progressive Party, but in reality, it was him that destroyed the Republican Party because of his ego. Well, I tell you, history might repeat itself there, fat ass. Um, we got Hunter's laptop. And on Hunter's laptop, there's a lot of stuff. And all somebody's got to do is read it. I know there's one person that's read this shit. There's got to be. And all we got to do is read it because it's huge. It's bigly. I'm telling you, it's huge.
Our materials sector, notice how important this 81 level is. Was support, became resistance, support. Now we're testing the 84 resistance level. Again, you don't need to be a market guru or a former hedge fund trader to see that some levels are more important than others. And if you know where these levels are, it's not just like, trivia. It's knowing where to place your buys, where to place your sells. For example, say you bought XLB down here and you say to yourself, gee, I'm going to sell it if it gets to 85. Well, you know what? It might get to 84 and just roll right over. And you missed it because you were right that the market was going to go up, but you didn't know that 84 was an important level. Had you known that, you could have placed your order at 84. Not as good as selling it at 85, but it's better than missing it if this thing rolls out of bed and goes back down to 81. All right, last but not least, here's our real estate sector. And once again, we see these market principles. You might say, gee, that looks like it's breaking above it. But I mean, it's only 50 cents. It's more about zones and ranges. But once again, we see these same principles, right? A level that was in resistance can remain intact for a while. All right, so I'm going to bring in Mr. Taft one more time here before the night's over. I think he wants to go back to heaven, which is probably where he was. I mean, he seemed like a good guy, other than the whole gluttony thing. All right, that's a bad joke. I mean, I'm no slimster. All right, I'm sorry about that, Mr. Taft. Thank you for being with us.
Okay, so I like to eat, don't you? I mean, in 100 years from now, when you're reading this, and most of you will be fat asses because you'd eat off that stuff from McDonald's, who needed to lose weight back then? Bro, you're breaking my back here. What the hell?
And here we are. Here's my bio. Uh, I mean, you can read about this on the site, but I worked for Gabelli, I worked for Cohen, I was head of trading at 3 different institutional money managers. I was a market maker. I have my MBA from NYU. I mean, whatever. I hate self-promoting myself, but I've been around the block a few times. So hopefully you'll subscribe to our site. Hopefully you become a member of the stock market jobber community, and I hope to see you there. Thank you, everybody. We really appreciate it.